What's up, everybody? I want to make sure the volume is where it needed to be because I had a little issues with that with previous recordings. But anyway, so I want to talk about topic, and the topic is reacting to the Trump tariff chaos. and it's interesting how I want to talk about how you can have an emotional reaction. It's kind of like, the limbic system part of the brain. And then you can have kind of like high order thinking reaction, kind of like a, like processing, the thinking part of your brain, which is the prefrontal cortex. And you can use that to your advantage in investing. If you use a lot of the limbic system and the emotional reaction, the amygdala, you're going to make some immediate decisions based on fear, based on panic, based on emotions. And I think as an investor, it's much better to use the prefrontal cortex part of your brain. And it's kind of involved with planning, it's involved with decisions, it's involved with critical thinking, and I think using that part of your brain works a lot better than using the part of your brain that's involved with emotions for investing. In the long term, in the short term, people just make a lot of emotional decisions in the short term, and so we're seeing that. We're seeing what's going on. So we got Dow drops 700, Dow slides 800 points as sell-off ramps up following Trump's global tariff hike. This is on CNBC, and this isn't the first reaction that we've seen. First started in April of 25. April, whatever day Trump decided to impose the tariffs, the next day, or for the next week, there was a massive emotional reaction, a panic reaction, all across, not just the U.S., but all across the globe. And we're seeing a reaction in Europe on Monday, and we're seeing a reaction in Asia on Monday. Well, the Nifty 50 went up a bit. We're seeing, more investment in gold and silver, and we're seeing a reaction with Bitcoin and Ether and with cryptocurrency. So there's a negative reaction that's going on in the crypto markets and the stock markets, particularly the Nasdaq. Today there's actually the smaller companies, Russell 2K, there's a negative reaction. Like the biggest negative reaction is with the Russell 2K. The Dow Jones, minus 1.55%. S&P, the bigger companies, a little bit smaller reaction, minus 1.06%. The Nasdaq and crypto have not fared as well, which is very, a lot of times, crypto is somewhat in line with some of the big tech companies in the United States. The performance of crypto is kind of in line with that. But my reaction is, so on Friday morning, this is the 23rd on a Monday. So on Friday, the 20th, Supreme Court struck down Trump tariffs. Trump had a reaction Friday afternoon. The stock market had a reaction Friday afternoon, and it reacted positively. And then on Saturday morning, or late Friday night, Saturday morning, we learned that Trump decided to enact tariffs of 10% from a new statute. And then later on Saturday, the 21st, he increased the tariffs from 10% to 15% globally, everywhere in the world. So not just United States, Asia, all the markets across the world. Every global tariff is at 15%. And so this kind of is a big change because a lot of countries had struck deals with the Trump administration, and so like there was a reaction from I was listening to there was a reaction from Australia, and the reaction was mainly disappointment from Australia. Reaction from yesterday. I heard from Sky News Australia. They were kind of the reaction was a little bit of disappointment. Reaction from China seemed like a bit of disappointment. So anyway, as an investor, I think it's good to look at this, using prefrontal cortex rather than the limbic system, and to react with thinking rather than with emotion. And the reason is because I think that what's going to happen in the stock market, and likely crypto as well, and very likely crypto as well, is that there's going to be times when people overreact, and there's times when people choose to they panic, they have negative emotions, they're acting very fearfully. And let's look at the S&P from a year. So we look at this was back in March of 25, or we look at April of 25. We go to like right before the massive tariff announcement. So we got the S&P is at let's look at the open as between 55 and 5600, around 5600 on towards the end of March, and then you go to the low 47, and looking at like close of 4900. So that's kind of a big drop, 5600 to 4900 in a week. And then you go right here, and you get to towards the end of April, and you're back up. So you get early May, the end of April, early May, you're back up to 5600. And so even with these short-term panic reactions to tariffs, which seems to be a feature of the second Trump administration, this seems to be an ongoing thing. Even if these countries are striking deals with the Trump administration, policy changes on a weekly, monthly basis. So it's kind of like it's hard to know what to do in the short term because of that. And so I think in the long term, the best way to deal with that is to dollar cost average. To continue to dollar cost average and look at the long term, because in spite of some changes here, like I said, 5600 towards the end of it took a month to recover. Took a month to recover from the tariff tantrum back in early April with the S&P. There was a recovery. Let's look at NASDAQ. 1 year. 1 year right there. So NASDAQ NASDAQ kind of just sold off a bit at the end of February of 25. But you have, this was right before on 331, Excuse me. At 331 of 25, looking at like 1700, average 17.3, and then drops to 15.2. See how long it takes to get back to 17.3. Nearly a month. Or it took about three weeks from 4748 to it took some time to get to recover back to where it was, and then it continued to move forward. So my take on that is the best thing to do is to dollar cost average into their index funds and into your whatever you're investing in. Just continue to dollar cost average into those things. Now, if you let's look at crypto. Now, crypto has been kind of in line with the Nasdaq, but it's also kind of does this thing. But I think there's kind of an overlap of investors in crypto and technology. And so we had on Saturday, the news on Friday was good for investors. Saturday we had some bad news again with the tariffs, and then on there wasn't much of a reaction in crypto until Sunday evening, and then there was a sell-off from about 68 and about 4,000 more on Bitcoin to 4,000 less, to from 68,000 to 64,000, and so Bitcoin, the whole crypto market is different than the. It's similar to the stock market, but it's also different. There's one of the differences is there's not as much. It's kind of in the early stage. There's kind of the Wild West, and there's more. There's not a lot of regulation. There's not a lot of and there's some uncertainty, and so. We'll see where the crypto bill that is being discussed in Washington, where that goes. Hopefully there'll be some clarity there. But like when people panic in the stock market, like obviously what happened in 1929. And I wasn't alive then. Not many people were that are alive now. But like back in 2008, we had quite a bit of panic and fear and a lot of selling in the stock market. And what happened then? What happens in the stock market is there's a lot of so there's kind of like a lot there's a reaction that like the government reacts to the government can step in and bail out whoever is the government can step in and help, and the government has historically done that. They've historically, or the Federal Reserve has helped. The stock market, the Federal Reserve has helped, companies that are, the Federal Reserve can choose to help. They can choose to not help. But a lot of the reason, we set up the Federal Reserve back in 1930s was to avoid another, Great Depression. But like with the crypto markets, it's worldwide. It's a bit different. There's a bit more risk, and there's more risk because there isn't a whole lot of intervention when something, and there's widespread fear in the market, which there is right now. People are kind of on their own. And so what happens, in my view, like we're still in extreme fear. We're at like 10 or 11 a week ago, and now we're at 14. But see, the thing is like with with Bitcoin, a lot of the crypto, people, there can just be like a lot of fear, and nobody, the governments don't, and the government, like one of the good parts of Bitcoin, one of the bad parts of Bitcoin is that there's not much government intervention at all, and so you kind of get to a spot where nobody's talking about Bitcoin, and nobody's, it's like, when this fear eventually dissipates, then eventually, like we're kind of at 68,000 for a while, 67, 68,000, and we went to 64,000. I mean, it could go lower from here. Like there's no telling where it could go a bit lower. But in my view, the long-term fundamentals are good. There's only so many places people are going to put money. In the future, the money supply keeps doubling every, the U.S. money supply doubles every 10 years. And so, in my view, I still think long-term it's a good thing. I think there's going to be people that continue to put money in Bitcoin long-term, in crypto long-term. There's going to be winners and losers. But I think that one's going to, I think Bitcoin is going to do well long-term. And, there's a supply cap, 21 million. There's, it's pretty much completely demand-based. If you look at, 2 years ago, the market cap, 4 years ago, market cap, 6 years ago, the market cap, it's been increasing much of the time. There's drawdowns. There's drawdowns from, like, it seems, there's kind of a 4-year cycle. At least people talk about that. But people keep, people keep putting money in Bitcoin. The fundamentals are good. Like people are panicked, people are fearful. I don't know that that's gonna win in the long term. I don't think the panic and fear is gonna win in the long term. I don't think this emotional reaction from in the stock market over the the tariffs, the policy change in tariffs, I don't think that's going to win in the long term. I think there's going to be, might have a little bit of a, 1 or 2 day drop. We'll probably have an increase again. But I mean, I think the massive drop is over. And that was back in April 10 months ago, or less than 10 months ago. That was back in April, and now people are starting to get used to this. You're getting used to this tariff. Emotional reactions from tariffs, and the policy changes nonstop. So it's kind of hard to make short-term decisions. So it's hard. To me, the best long-term, like the best decision you can make, is to just continue dollar cost averaging, into whatever your, ETFs you have, index ETFs, sector ETFs. Whichever ETFs you got. I like ETFs because it reduces some risk. Like you don't, by using ETFs that have a basket of stocks, you don't have to pay close attention to every single company. But I think there's two things that I think are going to be winners for both the stock market and crypto, and I think the winning ideas are dollar cost averaging. And even when there's short-term panics, if you dollar cost average or buy more when people are fearful, that'll be a good thing long-term. Same thing with Bitcoin, with crypto. If you dollar cost average and some of these established cryptos that are less risky, the lower you get on the market cap list, the more risky you get. So I'm invested in this one. I think Bitcoin's going to do long term. I think it'll be fine to, dollar cost average into Bitcoin, even when, you got these panics in the short term. So if you take, so dollar cost averaging and putting money in, every week, every month, over a long period of time, over years, over decades, I think it's a winning strategy, and I think thinking long term, thinking 5 years, 10 years, 15 years, 20 years, 30 years, like thinking long term is a better strategy than thinking and short term thinking in the stock market. So that's what I'm going to use. That's how I'm going to respond. I'm going to respond not with emotions. I'm going to respond with logic and thinking and critical thinking, because I think that's the winning approach. I think responding with emotions without thinking can lead to panic selling, and panic selling can lead to loss of money and the loss of potentially a lot of money. If you sell it, if you buy high, or and then something drops because of tariff. Look, 800 points today, 811, 304 in the Dow, 306 in the Nasdaq, down 81 in the S&P. Russell is down 58. Looks like the most selling is in the Russell, and then the Russell's 2K. So you got the smaller companies in addition to the larger companies, 1,500 additional companies in the Russell versus the S&P. There's more panic selling in the smaller companies, but I still feel like, if you look at the Russell, 1 year. This was back in March, and you're at 2,000. It only takes a month, less than a month, to get back to 2,000, even with the Russell, with the 2,000 index. And so you're basically going to be doing good by dollar cost averaging, putting money in every month, every week, every day, however you decide. I think that's a winning approach, and I think that'll do good for you in the long term, and to maintain a long term view, and try to use more prefrontal cortex thinking rather than limbic system thinking. Anyway, those are my thoughts for today. Hope you have a wonderful day.